The US dollar is little change to start the North American session this Thursday. I'll go through the technicals that are driving the three major currency pairs: euro versus US dollar, dollar versus yen, sterling versus US dollar. So let's get started. Looking at the euro versus US dollar on the hourly chart, we started the week up here. And had that volatile up, down and up trading session on Monday. We did find some support in this swing area through here, which was somewhat significant and proved significant for the week as well, before moving back to the upside, testing the moving averages here and starting its rotation back to the downside on Tuesday. We came right back down into that swing area through here, finding support once again in this area, but Wednesday we broke lower and stayed below that level through here, and we also stayed below that level in trading here today. As you can see on the downside, the move to the low for the week stalled yesterday just above the swing area right through here, with a number of different swing highs and swing lows going back in time through this period right through here. We did break a little bit below it here, but then reestablish support here. So it wasn't until we had to go back to this point right here, to the last time the price came down to that level, and lo and behold, buyers came in against the high of that swing area, also near the 61.8% retracement. So there's a lot of reasons why this area between 115.81 and 115.95 is, or 96, is support. And the buyers did come in early against that level, took a breath, and pushed the price higher and trading here today. Where do we go? We're right back to that swing area right through here, as mentioned, and finding willing sellers. So we're right now mired between, or trading between the high of a swing area down below and the high and the low of a swing area over here. In between sits the 100-day moving average, which we currently are below, keeping the bias a little bit more to the downside in the euro versus US dollar. If we were to trade back above the 100-day moving average, I would think that we go and retest the 50%, retest the swing area right through here. If we move above that level, that opens the door for the 100-hour moving average. Conversely, staying below this level keeps the bias more in the downward direction of the 61.8% retracement. The low of the swing area becomes the target for traders in with that scenario. Looking at the dollar versus yen next, I'm going to focus first on the daily chart. If you take a look at that, we've seen a big, huge move to the upside on Monday, from Friday into Monday. That was off the election results, and we continue to see that march to the upside with the stronger dollar, weaker yen. That move took the price above this ceiling right through here. There was a floor right here as well, but mostly a ceiling through here with a number of different swing highs coming in play, pushing the price to the downside. We returned to that ceiling area right through here, pushed to the downside. We broke above that ceiling and trading on, Tuesday, and that increase in momentum to the upside, stretching the pair toward the 61.8% retracement of the range since the 2024 high, the July 2024 high. Also near what was a swing level. It was minor, but when you have this low and it pushes higher, when you have this high and it pushes lower, you kind of pay attention to it. So that level came in at 153.15, also, and the 61.8 comes in at 153.39. So that was my target, or target level that we were aspiring to stretch toward. And indeed we did in trading here today, reaching just above that level. You can see that off of the 4-hour chart. This is that area right through here. How the price has been consolidating on this 4-hour chart after reaching toward it yesterday, but then stretched to the upside, but rotated back to the downside, currently trading at 152.79. Looking at the 5-minute chart, we looked at this earlier this week, noting how the price in the trend move to the upside utilized the moving averages as support targets to lean against. You can see the times that the market did that, did here, the trend's still higher. We came back down, tested the 200 here, trend's still higher. And then we started to move below it and trade above and below it, and trading here today, indicative of more of a consolidation, a time to take a breather. Yes, the price did move up to the high right here, but then rotated back to the downside. And as you can see, we're trading above and below the 100 and 200-hour moving average. So the market's taking a big breath after the big trend move to the upside, and that changes our bias and starts to look toward resistance up here near the 15-ish type area to the 39 level. That's in play. You could use this 100 and 200 bar moving averages as a barometer for the short term, but understand that the trend move to the top side may be over. The one thing that kind of keeps it in play, or the buyers in more control, is that you see this retracement level came down of this move to the upside. The last move to the upside came to the 50% retracement here and found support not once but twice. So that's more positive. We'll see if that bias continues in trading early today in the North American session. Finally, let's take a look at the sterling versus US dollar. And this currency pair, like the euro versus US dollar, has moved lower as well. We started the week off by coming up, testing the 100-day moving average up through here, but found willing sellers, fell below the 100, 200, trade above and below it. What like about Thursday's trade, as price high came up to those moving averages, found willing sellers, pushed to the downside. We did find support over here against this trend line, which was broken and trading here today right here, and we stretched down to the next key target area, which was defined by this swing area through here, which had different swing lows and swing highs going back in time through here. This is more of a floor, as you can see. So this area between 1.3323 and 1.3341 did its job of holding support near the high of it, similar to what we saw in the euro. And we saw the price rotate back to the upside. That move has taken the price back above this trend line, which we're currently trading above. If we're able to get below that level, then I think the bias starts to push again down toward this area down here. If we stay above it, we could see further corrective action to the upside. So there you have it. Look at 3 of the major currency pairs to kickstart your day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.